All right. All right. Let's see what we got here. Looks like we're live. Very good. Yep, looks good to me. I've got sound. That's all I need is sound. Interesting. I got a notification of my own live stream. That's very interesting. All right. So, let's see what we got here. Let's see what we got. I want to get some charts pulled up. I think I'll do that quick while we're waiting to get everybody together. Let me see here. Doop doop. Yeah, full screen. All right, good, good. That's what I like right there. Looks good, looks good. All right, looks like we got a few people in here. How's everybody doing tonight? Everybody like all that red we got today in the stock market? Oh, it's a good time to buy. It's a very good time to buy, guys. Everything's on sale. Everything is on sale. Raul says, doing well. All right, good. What are you up to tonight, Raul? How are you? I'm doing pretty good, man. I'm doing pretty good. I did a bunch of yard work today and went and worked out, and me and my son, we cut a bunch of trees down and had a big fire, and I looked at my stocks and just enjoyed the sea of red all day. Holy smoke. Everything was red today. It's been like that for four straight trading days now, so maybe we'll see a reversal pretty soon. Let's see. FB. I sure hope so. Let's see what we got here. Did you do any trading today, Raul? Did you pick up any stocks or do anything? Ooh, let's see. Earnings. Yeah, earnings. I need to go over that when we get rolling. You bought Facebook today. All right, cool, interesting. Well, we're going to talk about Facebook tonight. So I want to just go ahead and kind of get into it. So here's where I want to start. I'm going to go over to scene 2 and get my desktop pulled up. Whoop, oops, no. Let's go to scene 2 here. All right, so Raul bought Facebook today. Let me check back here. Okay, Raul bought Facebook today. First thing I want to do tonight, guys, is just kind of go over Facebook fundamentally. So I did a video back, I think it was the first day of January in 2018, this past year, and Facebook still had a very, very bullish sentiment, and all of Wall Street was still very excited about Facebook, and I still think long term this stock is still going to be a winner, but it's definitely seen a reversal in in its activity here over the past few months. So the real thing I want to zoom in here on this page, guys, got to 157. The 52-week low is $149, okay? But the big thing I want to zoom in and really concentrate on guys, is the earnings date. So that's the 30th of October. If you are a Facebook shareholder, it is imperative that you are there on that date, okay? That you're watching the earnings report on Facebook. And we will touch on why that's so important. What my game plan is I want to be able to live stream Facebook's earnings on the 30th. So that's my game plan. Like I said, as long as nothing comes up and nothing, is going on the 30th of October, I plan to do a live stream of Facebook's earnings and just kind of see what results they get from, it would be Q3 numbers. So I'm going to start by taking a fundamental look. And guys, this stock fundamentally is still fantastic. I still love everything about Facebook fundamentally. So they have a $454 billion market cap. It's a huge company. One of the biggest companies in the world. Their PE ratios are real clean and nice. They always have been. So the forward is about an 18.9 PE ratio. Now their 52-week change, they've actually lost 8% this year, in the past year, okay? And everybody, I hope everybody kind of knows the story behind it. If not, we're going to go over step by step just exactly what has happened to Facebook this year and social media as a whole. Now, these are the things I love about Facebook right here. It's profitability, operating margin, return on assets, return on equity. Just look at these profit margins, operating margins. Fantastic. All very positive. Still very capable of cranking out the same kind of numbers. These short percent of floats, they're updated through September 13th. And still, nobody really shorts Facebook. I know a lot of people are selling it, but there is a distinct difference between selling a stock and shorting it, okay? So it's important and very relevant to what we're trying to do to understand that there's still not a lot of shorts on Facebook. It still would be a very probably bad idea going into earnings because this stock can fly, okay? Absolutely has the ability to fly. 41% quarterly revenue growth, 31% quarterly earnings growth. There's really nothing to not love here. They don't pay a dividend. Of course, it's a big tech company, big growth tech company. They usually don't pay dividends like Google, Amazon, Facebook. Several of the big giants like that don't pay a dividend. But this right here, $42 billion in total cash and $121 million in debt. That is crazy. That is crazy good, So from a fundamental aspect, I still love everything about Facebook. It's easy. So I titled this video, Don't Fall in Love with Facebook Just Yet, because it's really easy to fall in love with this company fundamentally, okay? Let's look at the chart, and we're going to go over kind of the rocky year that Facebook has had so far. So it started off the year about high 170s, low 180s on their share price. Of course, they dipped down here in March to about 150 to 160 level. And then they rose all the way back up into the high 200s, and that's when they had that Q2 earnings report, and the stock lost 20% of its value in minutes, okay? And it dipped down way to the 170s. I know there was a lot of swarm reaction. I know there was a lot of people that, basically ran out, bought Facebook, or added to their position at 170. And my channel wasn't as established then as it is now. But, I remember commenting a lot and telling the people close to me, just be patient. We're going to get a lot of opportunities to buy Facebook stock. We're going to get a whole lot. Don't be in a big hurry, because they had lowered guidance for the remainder of 2018. So not just lowered guidance for one quarter. Facebook has come out and said, anticipate lowered guidance for the rest of 2018. And as you can see, we've gotten a lot more opportunities, a lot cheaper opportunities to buy into Facebook, and we are at our cheapest opportunity now. you know, over the past few days, we've really gotten some good opportunities to get in this stock. It's gotten as low as $150 per share, okay? So you look at it on a 3-month chart, you know, obviously it's seen this slow decrease. It would have been a really good short at earnings, but nobody really seen this coming, okay? I didn't see it coming. None of the big analysts seen it coming. Maybe a couple people did, but nobody, you know, everyone is used to Facebook beating, raising guidance, beating, raising guidance over and over and over. So I want to touch on a couple of the news articles that came out during that time, just to kind of refresh everybody's memory. So this goes back to July 25th. Facebook lost 20% on guidance for slowing revenue growth. I just touched on that a second ago. So it took a dive after hours. It was down 20%. Millions of shares sold, traded immediately. And the conference call revealed, you know, guidance dropping for revenue growth rates, okay? And then shortly after that, it was downgraded by a lot of investment firms and a lot of big banks, okay? So let's see. Now this article was published on the 26th, so it was the day after earnings. But UBS downgraded to neutral, and Nomura cut to neutral as well, of a price target of 183. Obviously, we're well below that now. Raymond James downgraded to outperform, and set a $210 price target, still below, you know, the $217 close that it was the day before. Morgan Stanley right here, guys. Morgan Stanley has always kind of beat up on Facebook a little bit. They've always been a lot harder on the big tech companies. Historically, they do, but they cut its price target to $285. And so obviously the stock reacted to all this. You know, a lot of people sold out. They got out of Facebook stock. It's a whole lot cheaper. Now, me personally, I've been holding Facebook for several years now. I've been investing in them really since 2013, 2014, when it was $30 and $40 a share is when I took my first position. And I've used it as a trading vehicle. Okay, so when it got up to 217, I remember when it started getting over 200, I thought about rotating out of Facebook stock, and I didn't. Okay, and now it's dipped down, and I've just held my shares. Okay, I haven't sold any. I've just continued to hold my shares of Facebook. I still have several 100% lifetime gain on them, and it's getting to the point now where I want to start adding to my position. Okay. This was another news article that was put out on September 28th. I don't know if y'all heard about this just a couple of weeks ago, but they were Facebook took a 2.6% dip after disclosing all their security problems they're having, where there was discovered that their security issues affected nearly 50 million accounts. And this was just kind of a very small flash crash. This is, I think a lot of people knew this was coming. And, you know, the big tech companies, guys, this kind of stuff happens all the time. And it's just a very small dip in the stock price that doesn't really add up to anything. I know it's just kind of panic news is all this really is. There's a lot of people that will probably stop using the platform or move on from that. But honestly, this doesn't have any real bearing on the numbers they report and the company direction. Okay. Today, though, October 8th, Credit Suisse has reeled in their expectations, and that made them dip once again. So, Credit Suisse trimmed its price target on lower near-term expectations for ad growth. Okay. So you go right down here, guys. The firm cut its target to $210 from $225. It's now implying a 34% upside from the current pricing of $156. Now, I actually kind of agree with this. Okay, I actually kind of agree with this, and I'll tell you why. Because even if Facebook beats on earnings, which I anticipate them to beat on earnings this next quarter, if they still have lowered guidance for the next quarter, all the stock is going to do, it's going to run up real hard temporarily and then just fall right back down and fall in line with the lowered guidance. If it does that, okay, it could blow the rooftop off expectations and earnings. And like I said, with that lowered guidance, that's most likely going to come. Like I said, even the company itself has come out and told us this in the last conference call. Very, very possible that we will see the stock be even cheaper than it is now. 2018 has not been good to Facebook, okay? I'm going to cover just some of the analyst price targets. It's still, based on 38 analyst ratings, still considered a strong buy. I consider it a strong buy, but I do think the price is going. I think we're going to get in cheaper now. I think we're going to retest the 140s. I really, really do. I think we're gonna hang in here with the 150s, but I think we're gonna retest the 140s on Facebook. So your high price target is $250. Your low is $140. That's really, really low. But I think, honestly, I'm going to have to lean in this direction. I think Facebook's going to be a lot cheaper. And so this Tip Ranks has not put the Credit Suisse downgrade on here yet, because that just happened today. But you can see most all analysts still hold this stock, rate this stock as a buy. Okay? And like down here, Pivotal Research has it at a sell with a $140 price target. But most analysts still rate this stock as a buy and with a price target well over $200. I do believe we are going to get back there. Okay? I'm going to jump back over here to the chat, see if we have any comments going on. What's your opinion about Portal they launched today? Are security problems temporary? Yeah. Let's see. So they launched Portal. Okay, now I might have missed that. Let me go here and look for it. I think I know what you're talking about. That's that video chat device for the, yeah, I did see something about that. And so this is supposed to compete with Alexa and Google Voice, right? Isn't that correct? Let me look here. So yeah, Facebook has some great, they have some absolutely great products, and they're still continuing to, in my opinion, grow as a company and do a lot better. And they're still, you know, Mark Zuckerberg is moving in the right direction. Another little piece of news I want to talk about too is that the Instagram, so the CEOs from Instagram left here a while back. Let me pull that news article up so I can cover it too. Let's see here. Yeah, okay, so Instagram's co-founders resigned from Facebook. This was back on the 24th of September. And so Kevin Systrom and Mike Krieger resigned from the photo sharing company today. Obviously, this was back in September, on the 24th of September. But the news was first reported by the New York Times and confirmed in a blog post, okay? And that they cited, they were frustrated by an uptick in Facebook CEO Mark Zuckerberg's meddling as Facebook became increasingly reliant on Instagram for its future, okay? You know, how would I take that? Me personally, I would actually, I'm going to have to take Mark Zuckerberg's side. Like I said, you know, Facebook made that acquisition a couple of years ago. I think it was 2012, one of the biggest tech acquisitions of all time. And, you know, Instagram is, you know, they are reliant on Instagram for a lot of things. But, you know, they own Instagram. So, it's not really much of a leg that they can stand on, okay? I think that problem will get resolved, and Facebook's going to keep moving in the right direction. But my opinion on the portal, like I said, I think that's going to be a really good product. Pretty much everything Facebook does ends up being a pretty good product. You know, even like I said, their Oculus Rift, a lot of the other things that they have come out with, it's going to be great. Okay. And like I said, very, very bullish on Facebook. Even like I said, through this difficult time where we're not getting the stock prices we want, I'm not. You know, my long-term holding on Facebook, it lost quite a bit of its value. You know, on the last earnings call, I was sitting there watching an earnings report on my computer. I had a headphone plugged in my ear, and I sat there and watched the stock price fall 20%. It's so fast, I couldn't even respond to it. But I did not sell. I'm still holding long, and I want to, add to my long-term position. Are security problems temporary? Yes, absolutely. Facebook has messed up in that aspect too. They're not perfect. Mark Zuckerberg has been on, he's had to deal with Congress, with the whole let me pull that article up. I'm having some problems here. I know that when he was on sitting in front of Congress testifying over the Cambridge Analytica scandal, I know investors lost a lot of confidence over that, okay? Because it was just, they freaked out. They seen him sitting there, testifying to Congress. And, private information of more than 87 million people was collected illegally. And so that, too, I think, is getting priced into the stock. But, yes, it's definitely something to be very aware of. You don't want... you do want to be aware of all that stuff. You definitely don't want to just overlook it, act like it's nothing. However, I think a lot of that is already priced into the stock. That's why I stress it's so important that we all kind of get together. Of course, I want to stream the next earnings report on the 30th. Very, very important that we all Facebook investors keep an eye on that, okay? Because, like I said, we could see the price pull back even more. I bought Facebook on the second fall around August at 162. Can't believe I didn't want up already. Well, I would just keep holding and adding to the position if you have the ability to do that, Michael. Because, Facebook's going to go back up. This has $1 trillion market cap wrote all over it. And, we're going to get there. Facebook is going to get there. Like I said, it's just going to take some time. They're in a recovery mode. It almost reminds me of a couple years ago in 2016 when Apple stock pulled back to $90 a share. So I don't know how many of y'all remember that. But, that was the time when Warren Buffett come in, invested into Apple, and now they're at $230. That Apple has just run almost 200% since that time. But, all the great companies, all the great stocks, do run up on difficult times. You just have to hang in there and keep your ear very close to all the news, everything that's happening, and, kind of keep the faith and keep going with them. I guess I have I'm in the fortunate enough position that I invested into Facebook years ago, and I collected shares throughout the years. So when this big fall off happened, like I said, I was still sitting at like a 100% gain, several 100%. I want to say I could check actually right now. So overall, let me get my brokerage pull up here. Yes, so lifetime on Facebook, I have a 216% lifetime gain on it. So But I was well over 300. I was, 300 or 400% lifetime. So, nobody likes seeing their shares depreciate in value. Okay. Okay. Raul says, yes, I can't believe I just did a double negative. Don't worry about it, man. Don't worry about it. Life goes on. Let's see. Google is closing Google Plus. This would be good for Facebook as there is no competition remaining. Yes, I agree with that. I also seen that news article to date as well. So let me pull that up. Yes, Google is shutting down Google Plus for consumers following a security lapse. So this was just put out about 3 hours ago. So they're shutting the consumer version of Google Plus down over the next 10 months. The company writes in a blog post today, the decision follows the revelation of a previously undisclosed security flaw that exposed users' profile data that was remedied in March of 2018. So that's interesting because Google did not see a big drop in their price when that happened, today. And I know investor confidence is very high in Google right now. I'm also very bullish on Google. It's one of my favorite stocks, one of my favorite long-term positions. But yes, and I'm sure Google will have a backup plan. They'll have a game plan for that. But that does have some bullish sentiment for Facebook as well. Okay, so yeah, I agree with that. Never mind, Snap is still there. Okay, so I'm actually going to do a video about Snapchat in the morning. I might even work on it tonight because Snapchat is at a very interesting price right now. I just can't, the thing about Snapchat, guys, I just cannot get over the fundamentals on that company. Here, I'll tell you what, I'll go to scene 2 and pull that up. We can go over all the social media stocks. We can go over Facebook, Twitter, and Snapchat, okay? All right, so Snapchat is at $7.48 a share. Now it's at $7.41 a share in aftermarket, okay? And it reports earnings November 5th through the 9th, okay? And this here, guys, this is pathetic what this company is going through right now. But, so in 52 weeks, it's lost damn near 50% of its value. They have a $9 billion market cap. I remember when they were sitting right on a $30 billion market cap. It was shortly after they IPO'd. But just these profit margins and operating margins, return on equity, it's terrible. People are still shorting this stock heavily, which is not good for your long-term investors. They do have more cash than debt, so that's a token in their pocket. But this minus $800 million operating cash flow and this negative $335 million levered free cash flow, something's got to turn around here. Let's discuss that. I'm gonna come back here to scene 1 and let's talk about that for just a second, because what does Snapchat really offer? Okay, that's a question I have. What is it? What can you really use Snapchat for? That's something I you text somebody and you send pictures and things like that, but it all disappears. It does not keep a record of anything, so everything just kind of disappears, and it just really doesn't, it's just not a platform I find myself using a lot. Okay, it's not a platform I find myself staying engaged with at all. It's not, it's not creeping into my numbers at all. Like, the amount of time, let's say all the time I spend on my phone, it's not something I'm using a lot. Okay, now that's my personal experience with it. That's my personal time. So I'm not everybody. I know that Snapchat does have value, and I know that they definitely have I think they have a future, but it's just I don't use a lot. I don't see a lot of value there. And as far as social media goes, I find it to be the weakest, the weakest platform out there. You know, Facebook offers so much. It offers, social. It offers business. It offers, local trading. It offers all these things, all these great, organizations and, social platforms to be a part of. Like I said, even in the stock market, there's a lot of great content on Facebook, and it's all free. You can get in these chat rooms, learn about the stock market, socialize with a lot of traders, talk to them. Snapchat doesn't really offer anything like that. Twitter is another one too. Twitter is a stock I've traded a lot, but never really went long. Never really wanted to go long on them. But I'm seeing some of the same trends come up with Twitter and Snapchat. Okay, so I know when Twitter got really, really cheap and really, really low, I know that, I've said, well, I need to go long here at $15 a share, 20, and I didn't. I would just trade in and out of it. I would trade, get small gains, take my profits, and leave. And honestly, I would probably do that with Snapchat too, because that would allow me to devote more income to investing in Facebook or a stock I like a lot better. Okay. So my government company has deferred comp. I have them take out pre-tax, put it in Vanguard S&P 500 index funds, large cap, and it gets 100% matched by Russell Small Mid Cap Index. Very good. Very good. I think this is a good balance for long term. Also have 3 S&P 500 ETFs in my main account. Yes, that sounds like you're doing quite well with that. Vanguard, very good index funds. You got some exposure, like I said, to large cap, and then the Russell Small Cap Mid Index. That's a good thing. You might want to spread it out and try to get a little bit more diversity in there. You might want to try to invest in China a little bit because, China is pulled way back, and they're kind of in the middle of a recession right now. But yeah, it looks like you have some, 3 S&P 500 ETFs. Looks like you're spread out pretty good. I would just take a look and look at all your options, and just remember, the more diversity, the better. So you want to get like some gold. That kind of risk protects you and your portfolio in the case of a crash, a stock market crash. I would want to invest in China. I would want to invest, I'd want to have some money in like a global index that tracks, a lot of gold, like a global ETF. But large cap, mid cap, smalls, and industry. And then you could even look, like I said, at your own personal ETFs in your portfolio. You could break it down and have, very specific sector. So like if you're very bullish on video gaming, if you're very bullish on social media, if you're very bullish on Google or whatever sector that you're very, very bullish on, you could invest heavily or more into some of those things. Skype is still there, yeah. Now, I want to say Microsoft owns Skype, though, don't they? Yeah. So, let's see what we got here. Yes, Microsoft owns Skype. That is a Microsoft product. So, I don't think that has any relevance to Facebook. But maybe... I'm not quite sure what you're asking me, Michael. Yeah, I have Baba and Sogo as Chinese plays. I have Baba, Sogo, Microsoft, V, IMMR, Micron, Netflix. Very good. Okay, good. Yeah, you're pretty tech heavy. But those are some good stocks to have. Visa, Microsoft. You have some Dow Jones representation. Alibaba, that's my favorite Chinese play. I love Alibaba. Again, kind of the same deal as, I feel like Facebook and Alibaba, even though they have two totally different circumstances going on right now, are kind of in the same place. You know, I think we're both going to see Alibaba and Facebook a lot cheaper. Okay, let me pull up Alibaba here. This poor Alibaba is just getting beat up. It's at $150 a share now. So its 52-week low on Alibaba is 148. It's right at 150. Like I said, it'd probably be a good place to start taking a starter position in Alibaba or add to. But again, I think we're going to be cheaper. I think it's going to get cheaper. Peter says, I'm thinking of what other sector I can be in. Well, let me ask you this. That's a good question to ask yourself, okay? Because I want you to think about the things that you personally believe are going to outperform the traditional stock market over the next 5 years, 10 years. I want you to start thinking that way about, gaming, virtual reality, Apple, what sector do you believe is going to outperform and really, run over the next? You can't have too much diversity either. I was watching a segment on CNBC earlier this evening, and they were talking about you don't want too much diversity because then you start to become a mutual fund. I disagree with that. I think you want as much diversity as you can possibly get. Okay, like military defense, they're actually running up right now. So your Boeing and Lockheed Martin, don't forget about those stocks, guys, because when the traditional market has pulled back, kind of weighed those stocks down, they're running up right now. And I have a lot of good ETFs and mutual funds with, and I have stock in, I own quite a bit of stock in Lockheed Martin too, So there's a lot of sectors. It's a lot of it too is sector rotation. People are pulling a lot of their money out of tech over this past week, Tech is getting beat up pretty bad. And of course that's everyone's favorite sector to invest in. So I would also look at that as just a good opportunity to buy in more. What do you think about the stock HUYA? I lost so much money on this stock. Uh-oh. Let's go check it out. Let's go to scene 2 so I can I'm going to jump over here to scene 2 so we can all take a look at it together. All right, so HUYA trades on the New York Stock Exchange. And it looks like it's 50. Whoa, it has got hit pretty hard over the past year. 52 weeks. It's went from $50 down to $20. Wow, wow, wow. Let's take a look at it fundamentally. $4 billion market cap. It's got a forward P of 39. I'm not really loving that. Should be a lot lower. That forward P should be a lot lower because they've lost so much value. So I'd have to look into a little bit more of why that's happened. So right here, yeah, no return on assets, no return on equity reported. I could cross-reference that with a couple other websites, try to find more accurate numbers, but the negative 66% profit margin and negative 0.46 operating margin, that's not good. That's not healthy. 125% quarterly revenue growth, that's good. And then they don't have a reportable quarterly earnings growth. So this company just does not have a lot of information going on right now. Maybe let's take a look at the income statement and see what we got here. So in 2016, yeah, it looks like their income, their gross profits are going up quite a bit. Their operating income is still negative. That's not so good. Non-recurring events, net income. So their net income is still negative. and that's not good. I would probably stay away from this stock. If it was me personally, I'm not loving what I see so far. Let's see. So we got number of analysts. I tell you what, I'm going to jump over to tip ranks and look at it. So you only got one analyst rating, and that's a hold with a $34 price target on tip ranks. So I would probably stay away from this one. Not enough coverage, not enough information for me to give out. I'd have to research and cross-reference a little bit more, but just on first glance, I don't want a piece of it. Bullish on gaming, but I feel China can shut down gaming if it wants. Yeah, I think your best bet there would be to, you know, bet on both horses and hope they both win. You know, I'm bullish on China as it pulls back and declines. You know, I have certain specific price points I'm looking for in Alibaba, Tencent, and a couple of the Chinese ETFs I'm invested in. So when 10% comes off that price, I'm probably going to buy a little more, add to my positions. And I think we're going to, like I said, because of the trading tariffs on all the mess we got going on with China, I think we're going to have a lot of opportunities to do that. Gaming, very bullish on gaming. I just made a Activision Blizzard video yesterday. I have a Take-Two Interactive video, and I'm also going to do Electronic Arts. I have a Nintendo video. So I'm very, very bullish on gaming as an entire sector, and I would really like to. I'm heavily invested in gaming, and like I said, I believe that sector stands to continue outperforming in 2018 and 2019 and beyond. I think in 5 years, your companies like Microsoft, Sony, Nintendo, Electronic Arts, Take-Two, Activision Blizzard, all stand to outperform the market, outperform your traditional market, you know. So, true, I will add a defense stock. I like MELI, but probably overvalued. Okay, let's take a look at that real quick. MELI. Whoa, it's got a big price on it. $339.50. It has no dividend though. Doesn't look like it pays any dividend. So it looks like the dividend got cut on this. They have a $14 billion market cap, and they've come up 24% year to date, so that's pretty good. I tell you what, here's how I like to play defense. I have 3 methods of playing the defense sector. So I like Lockheed Martin. I like Boeing. Both of those are great stocks, especially if you're an investor with M1 Finance, where you can buy fractional shares, so you can get in a lot cheaper. Or you can buy, just fractions of a share. I also like ticker symbol PPA. I'll throw it down here in the chat. So check that ETF out, because that's a really good play for the entire defense sector. You're going to get a lot of exposure to all those companies. Let me see here. Let me see what we got. Okay, yes. So, let's see. These holdings are updated through September of 2018. So, very recent. They have a 7% holding Lockheed Martin, 7% holding in Boeing. They're invested in Honeywell, United Technologies, General Dynamics, Raytheon, Northrop, Harris, Rockwell Collins. So, I love pretty much all those companies. I think they fly together. A lot of them do. Of course, Boeing has probably performed the best over the past couple of years. But Lockheed Martin has too. I've done a lot of videos last year about Lockheed Martin. And let's see. Check out PPA if you get a minute, because that's, that is pretty good. Like I said, as far as your cost, it's only about $60 a share, and they pay a dividend. They pay a really good dividend. Of course, they have a 0.6% expense ratio, but very good ETF to hold right there. And like I said, in 1 year they've increased 20%. In 3 years they've increased about 24%. So very safe, very relatively safe. All right, Raul, what's your opinion about Microsoft? I love Microsoft. I'm invested in Microsoft, have been for quite a while. Their last earnings report was outstanding. I can pull up, how about I just pull up some charts and stuff on Microsoft. So in 3 months, this is a 3-month movement. 1 year though, look at that, guys. Just look at that. A year ago, it was in the 70s, and Microsoft has just taken off and run like crazy. So their earnings report was real close to the same time Facebook's was. I'm guessing it probably right here where it spiked up, somewhere in there. And they got up to $111, $112 a share. And now just it's pulling back due to the overall slow of the market right now. But I love everything about Microsoft, guys. Great investment. Huge company, huge, $850 billion market cap. And just great numbers all the way around. Nobody shorts Microsoft. Look at this. Nobody. They have less than 1% shorts. And $133 billion in cash, $87 billion in debt. Very good numbers there. Pay a nice dividend. Their forward yield is about a 1.6. I feel like they should increase that a little bit, but like I said, that's due to the massive growth in the stock. So that's to me is better than a dividend, is if you're getting a lot of return on the stock. Yeah, I love everything about Microsoft. All right. I've played almost every Blizzard game. Probably have killed you in Overwatch. You probably have. I'm not any good at it. And me and my son were playing it here a few weeks ago, and it's quite it was pretty exciting. But yeah, I'm not too good at it. I'm not good at Fortnite either. Oh my gosh, I'm not good at Fortnite. I don't know. We're gonna get the new Call of Duty next week. And I might, we're talking about doing a gaming channel and streaming some of that, but I don't want it to interfere or make me take focus off my investing channel. So I might just let my son do all that and just help him along. He has a gaming channel, so he has a lot of fun with that. Thanks for checking out PPA. Noticed XAR. Oh yes, XAR is a good one also. Very good defense stock. That's the let's see, that's based off the S&P 500. So they've had good growth too. Real good growth. Yeah, so this was $70 to $80 about a year ago, and now they're well up over. They've hit 100. They've got over 100 a few times. Now they're running at the 90s. Let me see what kind of a dividend they pay. I don't have any shares of this, but they are on my surveillance, and I do keep up with them. So yeah, 0.35% expense ratio. That's pretty good. They have a less than 1% yield. So your expense ratio, you could probably just subtract that from your yield. Looks like you would get a dividend of around 0.55%. So at least you're getting something. Let me look at PPA and see what kind of... So yeah, PPA has a 0.6% expense ratio and a 0.51% yield. So the expense ratio actually is going to be more than your dividend yield. That I'm not real crazy about, but I love the growth. Okay, I love the growth. Well, all right, guys. I think we're about wrapped up for the evening. Is there anything else y'all are wondering about or want to talk about quick? And if not, I'll probably go ahead and sign off for the night. My final message I want to leave you with is just be patient on Facebook. I don't think there's any reason to rush into it. You know, I think we're going to get cheaper. I think we're going to retest the 140s, possibly the 130s, you know. And I will be here live streaming the next earnings report, and that is October 30th. I've probably mentioned that about 100 times now, but I'm going to be all over that. So thanks for coming out, guys. I appreciate all the comments, and we will see you soon.